Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money maze, and today we're looking at Moleculin Biotech Incorporated's latest filing. And let me tell you, it has some interesting moves happening. So if you are wondering if this company is making a comeback or just trying to raise more cash for their next big thing, stick around because we are about to break it all down. And before we dive in, if you love getting these clear, actionable insights from complex financial documents, make sure you are subscribed. We also have a fantastic community over on Discord, all linked in the description below, so come join the conversation. Alright, so what we have here is a filing related to an offering of common stock. Think of it like a company saying, hey, we want to sell more of our company's ownership pieces to the public to get more money to run our business. This particular document is really an update to a previous plan they had for selling their stock. Moleculin Biotech Incorporated, based in the Woodlands, Texas, is a company focused on developing cancer therapies. They are working on treatments that are designed to be more effective and less toxic than current options. The ticker symbol for their stock that you'll find on the Nasdaq Capital Market is MBRX. The headline here is that Moleculin is increasing the amount of money they can raise by selling their stock. Initially, they had a plan to sell up to $6.5 million worth of stock. Now they are saying they can sell up to $8.2 million worth of stock. This is an increase of $1.7 million. This means they are updating their existing agreement with Roth Capital Partners Incorporated to offer more shares. They have already sold some shares under this agreement. As of the date of this filing, they've sold about $1.06 million worth of stock. So this filing is essentially saying they want to sell even more in the future beyond what they've already sold. Now let's talk about the stock price. On the 22nd of December of 2025, the stock was trading at $4.01. This kind of offering where a company sells stock over time through an agent is often called an at-the-market or ATM offering. It is a way for companies to raise capital flexibly. This next bit talks about what is called their public float. Think of public float as the shares of the company that are available for anyone to buy and sell on the stock market. It is basically the market's estimation of how much the publicly traded part of the company is worth. They're calculating this based on a specific stock price from a few weeks earlier in November, which was $12.99. This is important because there are rules about how much a company can sell in these types of offerings without needing even more scrutiny. Specifically, they can't sell more than 1/3 of their public float in a 12-month period. If their public float is below $75 million, they've already sold about $4.9 million worth of securities in the last year under similar rules. So this increase in their ATM offering is within those general guidelines. Now, it is crucial to understand that investing in a company like Moleculin Biotech Incorporated, especially one that is developing new medical treatments, comes with significant risks. They highlight this strongly in their filing. They direct people to the risk factors section in their previous documents. Regulatory hurdles, competition, and the need for ongoing funding. These are not small things they are warning you about. For any biotech company, the path from developing a drug to getting it approved and making it widely available is long, expensive, and not guaranteed. There is always a chance that the research doesn't pan out or that a competitor gets there first, or that the regulatory bodies don't approve the treatments. So what is the bottom line here? Moleculin Biotech Incorporated is raising more money through selling its stock. They are increasing the amount they can sell under an existing agreement. This is a common move for companies that need capital to fund their operations, research, and development. For investors, this means more shares will be available, potentially diluting the ownership stake of existing shareholders if they don't buy more. However, the company's ability to raise this additional capital could be crucial for them to continue their work on potentially life-saving therapies. The key takeaway really is that they still believe in their ability to raise funds this way to support their future. Now, from a purely financial perspective, and without diving into deep financial tables, which aren't the main focus of this particular filing, what we see is a company actively seeking capital. This is typical for companies in the biotech sector that are pre-revenue or in early stages of development. They need significant investment to fund their research and clinical trials. The fact that they are increasing their offering size suggests they have a strategic need for more cash, and that their underwriter Roth Capital Partners is confident in their ability to sell those shares. When we look at companies like Moleculin, it is important to think like Warren Buffett. He often says it is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. While we don't have full financial statements here, the core question for investors is whether Moleculin's technology and pipeline are truly wonderful. The risk factor section is your place to start researching that. Are their cancer therapies groundbreaking? What kind of progress have they shown in clinical trials? Have they faced setbacks or achieved significant milestones? The risks are real because the success of a biotech company hinges on scientific breakthroughs and regulatory approval, which are inherently uncertain. The increased offering size isn't necessarily a sign of trouble. but it does mean they need more fuel for their journey. The question for any investor is whether the potential reward of a successful drug outweighs the very real risk of the drug not making it to market or not being commercially successful. So, what is our take on Moleculin Biotech Incorporated based on this filing? It's a company that is actively managing its capital, needs to push forward its research and development in a very high-risk, high-reward industry. The increased offering suggests continued confidence from their financial partners in their ability to tap the public markets for funds. However, investors should be acutely aware of the inherent risks associated with biotech investments. You are essentially betting on the success of their scientific endeavors and their ability to navigate the complex regulatory landscape. The company's direction seems to be focused on securing the funding necessary for ongoing development, but the ultimate success will depend on their product pipeline and market adoption. Alright, that is our quick breakdown of this Moleculin Biotech Incorporated filing. What is your take on this stock offering and what it means for the company's future? Are you bullish or bearish on Moleculin? Let us know in the comments below. If you found this analysis helpful, please give it a thumbs up and consider subscribing for more deep dives into the world of corporate finance. And don't forget to join our Discord community linked in the description to continue the conversation. Thanks for watching, and we'll see you in the next video.